Welcome friends. We are starting with goods and services tax today. Goods and services tax, one of the biggest indirect tax reform in the country since independence. And it is being stated that if GST coming in the country from April 2016, it will bring 2% incremental GDP growth of the country. So GST is the need of the hour. Today, we are going to discuss goods and services tax, why we need GST, importance of GST. We will discuss overview, model, and we will discuss the aspect of 122 Constitution Amendment Bill GST, which is placed before Parliament on 19 December 2014. So starting with need of the GST, why we need GST today. Presently, in terms of Article 246, 7 schedule to the Constitution of India, we got three lists: union list, state list, and concurrent list. Union list, only central government can levy taxes. State list, only state government can levy taxes. Concurrent list, both central and state can levy taxes. When we look at central levy, we got custom duty, we got excise duty, we got service tax, and then on top of it we got education cess, secondary higher education cess, we got product specific cess like automobile cess, we got research and development cess. These are all central levy given by union list. Coming back to state list, we got value added tax, we got central sales tax. It is central levy but collected by state government. We got entry tax, we got octroi, we got entertainment tax, we got luxury tax. At the same time, we got local body tax in Maharashtra. So having multiple taxes at central level and state level, we all are looking for some clarity, simplification, uniformity in indirect taxes. Hence, GST is the need of the hour. But what are the practical problems we face in each of the central levy and state levy we are going to discuss now. Under central levy, start with the custom duty. You know, when we import goods, we pay basic custom duty, we pay countervailing duty, which is equivalent of excise duty applicable on like goods manufactured in India. We pay custom cess, we pay special additional duty called SAT in lieu of sales tax. Existing problem in custom duty is that the manufacturer can avail the credit of CVD and SAT, but he can't avail the credit of BCD and custom cess, which become cost of production for the manufacturer. At the same time, service provider can avail the credit of countervailing duty only. He can't avail the credit of SAT. So for a service provider, BCD, custom cess and SAT becomes cost. This is one of the problem coming from credit perspective. And the additional problem, we got inverted duty structure. At the same time, we got accumulation of standard credit in the hands of manufacturer in lieu of low value addition, because they take credit of CVD and SAT, but if there is no enough value addition, they are not being able to utilize the credit, and thereby there is accumulation. They can't go for the fund which is applicable to the importer of goods for trading of imported goods. So we have to find out solution, and we all are looking for all these aspects in GST. Apart from custom duty, we are now moving to excise duty. Under excise duty, taxable event is manufacturing of goods in India. So manufacture term is very important. Manufacture means any activity which is incidental or ancillary to the completion of manufactured products, or any activity which is defined in section note or chapter note of first schedule to SETA. At the same time, we got deemed manufacture. And what is this deemed manufacture? Any activity which is packing, repacking, labeling, relabeling, alteration of retail sale price pertaining to products specified in schedule 3 to SETA, called deemed manufacture concept. Then we got variable rate under excise duty, 2% without sandbag, 6%, 12%, 18%, 24%, 27%, 30%, multiple rate. We got multiple valuation system majorly which is being followed, prediction capacity based, MRP based, maximum retail price, section 4A of Excise Act. We got transaction value, section 4 of Central Excise Act 1944. This transaction value concept has got now different dimension in lieu of Honorable Supreme Court judgment in the case of Fiat India. You are aware of transaction value applicable on a price which is sole consideration at the time and place of removal, and buyer and assessees are not related. But with the Fiat judgment, the concept of transaction value has got changed. We have to see that transaction value should not be driven by any direct or indirect consideration flowing from buyer to the assessee. Thereafter, we got exemption under excise. Some exemptions are absolute, some are conditional exemption. At the same time, we got excise free zone, Uttaranchal and Himachal, absolute exemption. We got excise free zone by way of refund mechanism like Jammu and Kashmir. And then we got classification under Central Excise. We got Central Excise Tariff Act 1985. Now service tax. We all know service tax started from 1st July 1994 on 3 services at the rate of 5%. Until 1st July 2012, service tax was applicable under the positive list regime of service tax. Now it has been paradigm shift from 1st July 2012, negative list regime of service tax. Taxable even for the chargeability of service tax is rendering of service. Under service tax, we got definition of service after 18 years of service tax history from 1st July 2012. Let's see the definition of service, which is very first time provided. What would be the service under the GST scenario? And we will discuss under 122 Constitution Amendment Bill what is the definition of service given, and then we make comparison how the service definition has got opening wider term which is being provided in GST Constitution Amendment Bill by 122 Constitution Amendment. Thereafter, we got negative list, 17 services. We got mega exemption by notification number 25/2012, around 45 services. We got valuation issue under service tax. We got abatement. At the same time, we got reverse charge and partial reverse charge under service tax. You know, partial reverse charge wherein both service provider and service recipient has to pay service tax. Therefore, partial reverse charge, renting of motor vehicle to carry passengers, supply of manpower, security services and works contract. It is applicable when service provider is individual, firm, HUF, AOP, providing service to business entity registered as a body corporate in taxable territory. Service tax is a happening issue for Government of India, and now under indirect tax, service tax is the majorly collected indirect tax while comparing excise duty and custom duty. Now I am moving to state taxes. VAT, value added tax. When applicable, it is applicable on transfer of property in goods. And then we got deemed sale concept. What is deemed sale concept? In terms of Article 366(29)(a), deemed sale, works contract, AC restaurant, etc. At the same time, you would be knowing when this VAT got implemented in the country, Haryana being first state in 2003, followed by more than 25 states in 2005 and 6. Empowered committee of all state finance minister agreed they will keep uniform VAT rate, floor rate like 1%, 4%, 12.5%, 20%. But what is happening today? Today, unilaterally states are changing the VAT rate. You have seen some states are charging 5% against the floor rate of 4%, and some of the states As against the floor rate of 12.5%, they are charging 13.5, even 14.5, and that is creating imbalance of trade between the state. At the same time, under VAT, we got multiple kind of diversity. There is no uniformity in terms of registration. There is no uniformity in terms of due date of payment. No uniformity in terms of return filing, with the monthly, quarterly and forms are different altogether. If we are having office in 30 states in the country, then we have to follow different provision of respective state. At the same time, different assessment process, different appellate process, different refund mechanism, different ITC, input tax credit criteria as given by respective state provision, different provision pertaining to ITC reversal on sale of GST. So different VAT dimension, forms and procedure, and the taxable event for VAT chargeability is transfer of property in goods along with deemed sale, but diversity is there when we look at VAT provision across the country. Now moving to CST, Central Sales Tax. It is applicable for interstate sale of goods. CST, we all know, no credit is available. At the same time, we got it need to be followed by again C form. There has to be form provided by buyer to a seller, C form, and CST again cascading within our indirect tax system. So having said major of the indirect taxes from central perspective and state perspective, let's understand what are the item of double taxation and why we are having problem in existing indirect taxes. When we look at excise versus service tax, the double taxation applicable on drawing and design, software, erection and commissioning along with the supply of goods. Double taxation dispute are persisting for excise versus service tax. When we look at service tax versus VAT, we got multiple line item where double taxation applicable, starting with construction before completion. Both are chargeable, VAT and service tax. IPR, intellectual property right. We got IT software services, right to use of software, VAT chargeable, service tax chargeable. We got hire purchase and leasing. We got right to use of movable goods. Though silver lining is effective possession and control, but still dispute persists with the service tax applicable or VAT applicable. Come to works contract, double taxation, central provisions are different with the state provision, and at the end trade is ending up paying double taxes. AC restaurant services, double taxes. You go and buy burger in McDonald's, Pizza Hut, you have to pay VAT on 30 rupees burger. At the same time, on 40% of 30 rupees, we are discharging service tax. So double taxation. They are double taxation coming from service tax versus VAT provision. Coming back to cascading. As I clearly said, cascading exists in our indirect tax system. Basic custom duty and custom cess, it's cascading in the hands of manufacturer, no credit available. At the same time, manufacturer charging excise duty, no credit available in the hands of VAT dealer. CST is again cascading. On top of it, we got entry tax, octroi. Some of the state allow credit of entry tax with the VAT liability, but octroi no credit available, and local body tax which is applicable in Maharashtra. So having so many issues in indirect taxes from central and state levy. At the same time, we got double taxation and cascading, giving a need for the country GST should come in. If this GST coming in, it is estimated it will give incremental 2% growth or in our GDP for the country. Evolution of GST. Now we are going to discuss important dates of evolution of GST in the country. 1974, L.K. Jha Committee suggested VAT for the country. 1986, we got MODVET. 1991, Chellaiya Committee suggested GST or VAT for the country. 1994, 1st July 1994, service tax was implemented on 3 services at the rate of 5%. 99-2000, empowered committee of all state finance minister was formed, and they have prescribed uniform floor rate for the VAT chargeability: 1%, 4%, 12.5%. 2003, Haryana being the first state to implement the VAT in the country. 10/9/2004, Modbet got converted into Sandbet credit account, merger of excise and service tax for cross-utilization. Then 2005 and 6, more than 25 states implemented VAT in the country. 2007, important one. First time, then Finance Minister spoke about GST in the country, and on that premise, Central Sales Tax CST rate reduced from 4% to 3%. 10th November 2009, we got first discussion paper on GST. 15 December 2009, 13th Finance Commission has given report on GST. 25th of January 2010, Department of Revenue has commented on first discussion paper on GST. Then April 2010, sometime around, then Finance Minister suggested what would be probable GST rate. In February 2011, IT team got set up for GST structure. In March 2011, we got 115 Constitution Amendment Bill for GST. Then July 2012, we got negativeless regime of service tax. July 2013, Parliament Standing Committee has submitted the report on 115 Constitution Amendment Bill. April 2014, 115 Constitution Amendment Bill got lapsed, and now it has been brought by 122 Constitution Amendment Bill, which is placed before Parliament on 19 December 2014. Now we all are discussing how GST would be, what are the model available, what rate would be, and what are the taxes from indirect tax, central levy, and state going to be subsumed in GST. So now we are going to discuss the future model which we are looking for the country. So GST model for the country. Before starting GST model for the country, we have to look at what the model available across the world. We got national GST. In national GST, central levy taxes with the revenue sharing with the state. This model is being followed by Australia and China. We got state GST, wherein state levy the taxes. This model is being followed at USA. Concurrent dual GST model. In this model, both central and state levy taxes on both goods and services. This model is being followed at Brazil and Canada. India is looking for this model to be followed, dual GST model, which is political necessity for the country, but we are looking into this model. Non-concurrent dual GST model. In this model, state levy taxes on goods, central levy taxes on services. And then we got another model which is being followed across the world, cubic model. Some of the countries are following cubic model. In this particular model, separate legislation made by central federal government and state government for the tax collection, procedure, amount to be followed, administration, etc. So these are the model available across the world. India is looking for dual GST model, wherein both central and state will levy taxes on both goods and services.